Today in this video, we're going to talk about why your escrow account could make your mortgage unbearable. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. Okay, let's talk about, I know we've all been seeing those videos where people are talking about, oh, home ownership ain't for me. Home ownership is a trap. Oh, this is awful. I wish I'd never bought a house. We all seeing the videos. And I'm going to tell you, probably the main reason, the problem is the escrow account, okay? Whenever you get a mortgage, unless you're putting more than 20% down, 20% or more down, you got to have an escrow account. And that escrow account, or your impound account, as it's called, is where you're putting money in there, into that account, so that the mortgage company that you pay your mortgage to, they're going to pay your taxes and your insurance for you at the end of the year. Okay. So it's just supposed to be each month is supposed to be a 12th of that bill going into the escrow account. So then at the end of the year, or when the bill come due, your mortgage company has the money to pay your insurance and to pay your taxes. The issue where people are getting upset about is the escrow account. You need to estimate your own escrow account, especially for people who are buying new construction, especially for people who know you have an assessment, a new assessment coming up. Okay, so let's talk about new construction first. When you first buy a house and it's new construction, the taxes are based on the dirt that the house is sitting on. Okay, so obviously dirt, as opposed to a full-blown house sitting on it, those two different values. So a lot of times the escrow company, your title company when you're closing, or your title attorney, and the first mortgage company, because a lot of times your loan will get sold. But anyway, they're just estimating what the property taxes would be. So like if the dirt it only has $1,000 value, then they're going to divide that 1,000 by 12. Okay, so it's going to be roughly like $80 something a month, and that's what they're going to put as the escrow amount for the taxes. Okay. A lot of times when you go to get your homeowner's insurance, when you are buying new construction, your insurance agent that you'll talk to, they're going to ask you, how much are you buying the house for? They're going to look and see how far are you from the fire hydrant, in case there's a fire. They're going to look at a whole bunch of different stuff in the construction. And normally the homeowner's insurance quote is going to be pretty good. It's decent as far as the right amount of money. Okay. I'm just going to tell you from experience. I've bought new construction. I've bought existing construction. I done bought a lot of properties, and I've helped a lot of people buy a lot of properties. For your new construction, I would triple the amount of escrow. Okay. So let's say you getting ready to close on your house. And let's say it's a $300,000 property. Okay. And again, I'm in Tennessee, so, take it with a grain of salt if you're in a higher cost area. Okay. But let's say, for Pete's sake, we're going to estimate that your escrow would be $150 a month. That's going to be your taxes and your insurance. I would take that number and make it $450 a month. Why? Because your property taxes are going to be way more higher than the lot. Because what's going to happen is the house is going to get built, and then your assessor, your tax assessor, your property assessor in your county, in your city, in your parish, in your whatever, they're going to come by and they're going to compare, they're going to look and see how many square feet, you got and everything, because the builder had to file those plans with the county, the city, to get your building permit, right? They have to tell the county how big is this property going to be when they apply for your building permit. So they know, Okay? They gonna come by your house and they gonna take pictures of it and everything. Gonna be like, okay, cool. Because listen, you cannot pay taxes on $100,000 lot and the house is worth $300,000. You got to put it all together. Okay. So just know that your taxes is probably 3 times what has been guesstimated to start your escrow account. So I would automatically put another $300 on that note. Okay. And again, if you do not have the discipline to do this yourself, when you start making your payments, there are lines when you log in or you on the app, whatever, however you doing it, pay your note. Even if you old school and you get the statement in the mail and then you got the little coupon that you tear off and mail back in, there are additional lines. It says additional escrow or additional payment towards principal. Okay. Additional principal payment. I strongly urge everyone, if you just starting off on that new construction home, put that extra $300, put it on their additional escrow and send it in. Send it in. Let them hold it. If you do not have the discipline to do that, I get people, well, I was going to put it in my savings account. I was going to put it in my savings account, or I was putting in my savings account, and then I need tires. And then the kids started school back, and then such and such wanted to play football, and she wanted to be a cheerleader, and all this, and I was dipping. And then at the end of the year, you getting that escrow bill where your escrow is way short. And they telling you can either send us $2,000 to catch this escrow account up, or we gonna break it up over the new year, over the next year, plus the extra that you should have been paying in every month. This how people's mortgage payments are blowing them out the water because the escrow's out of control. Listen, get ahead of it from the start, from the first payment. Put that extra $300 on there. When you get your LE, you get your loan estimate from the mortgage person, from your mortgage person. When you get the loan estimate, go on and put $300 more on there. And if you cannot make that payment, if you're not comfortable with making the payment that's on the loan estimate plus another $300 for your taxes, don't do it. Don't do it. Save yourself some trouble. You need to be buying a lesser expensive property if you're not able to do that. Listen, I want everybody to be able to buy whatever you want to buy, but the numbers don't lie. You gonna need to put another $300 on there. So before you even look, like I said, if the loan estimate and putting $300 on top of it is blowing you out the water, you need to pump the brakes. You need to do something else. This is not the right property for you. And the same can be said for the insurance. Let me say this. When I first bought, I think I don't know if it was this house or the previous house or whatever. But anyway, at first my homeowner's insurance was only $1,200. It was this house. It was like $1,200 a year. Okay, it was like $1,200. Well, what happens with the property insurance? Just like I said in another video, when you don't have FEMA to be the first line of defense to help people when there's a disaster, the insurance company is making note of that. So they're gonna be like, okay, so they're not gonna be able to get federal money. So the first place and the state already hollering they broke. So the first place they gonna come is to insurance. If something happened to this property, your insurance company keeps an eye on everything. Listen, if the price of lumber jumps up because if we're tariffing the countries where the lumber come from or other parts come from, and there's an additional cost, there's an additional tariff on those. The insurance company is making note of that. So your premiums got to go up. Okay. If something goes on in your neighborhood, okay, for those of you in a HOA, but especially those of you in a condo, and you ain't even got to be in Florida, but y'all Florida folks with the condos, y'all just getting tore out the frame right now because of the insurance costs. Insurance companies are for-profit businesses. I'm going to say this again. This is not a charity. They are a for-profit business. They their shareholders are expecting a return on their investment. So they're keeping an eye on all of this. You understand what I'm saying? You may not have had any claims. I get this all the time. Well, I ain't had no claims. I dig it. I understand that. You may not have had any claims, but your neighbors have had claims. But other people who have State Farm, Allstate, Farmers, Farm Bureau, whoever you with, other people have had claims. And it may not be even people in your state. Like, let's say you in Tennessee. I ain't had no claim. Knock on wood, praise the Lord again, one more time. We good right here. I'm good right here. But I know I'm with State Farm. State Farm done pulled out of Florida. You know what I'm saying? Because they had so many losses. They had so many $1 billion worth of losses. That loss got to be spread around to everybody. Everybody got to pay for it. Okay? So on your homeowner's insurance, like I said, when I first got this policy, it was $1,200. I got the little statement in the mail today from State Farm saying, hey, here's your insurance bill for the next year. Don't worry about it. Don't pay it. It's being paid by your mortgage company. It's $2,200 a year. It's $2,200 a year. That's another $1,000 a year. So again, I personally, this is what I would do if I was y'all. Even on the homeowners, put another $100 a month. Either put it in a savings account, add additional escrow, do something. But just, you're going to have to plan ahead for this stuff that's going to be more expensive. And that's what it's going to be. It's going to be more expensive than the loan estimate. It's going to be more expensive than what you calculated, what you guesstimated, whatever. So if you don't want your head blown off when you buying a property, when you buying a house, when you buying a condo, whatever it is that you buying, you need to, in my opinion, especially for new construction, you need to triple the estimate for the property taxes. If it's an existing home, I would still double the property tax estimate. I would. So like if initially you got they quoting you $150 for the property taxes, go on and make that $300 and put that other $150 in the escrow account or hold it to the side or do something, but be expecting it to be higher. I don't know what be happening. That's beyond my scope because, the things go on. The government will raise your property taxes. You might get a special assessment. Your condo owners, you may have to get new roofs. You may have to pave the parking lot. You may have to get a new landscaping company. There's so many things that can happen. So put that buffer on top of your payment and then you won't be upset about it and it won't come as a surprise to you. Again, my name is Rhonda Burgess and I am a mortgage broker here in the Nashville, Tennessee area. If this video has helped you, please give the video a thumbs up. If it will help someone please share the video. Just spread the word because more people could be able to save and that could save their home and home ownership not be such a burden or an albatross around their neck. Thank you. And as always, have a blessed day.